Recording in progress.
Okay, good morning, everyone. Welcome you all for day five. And let me just open this. Just give me a second. So, what's happening with the markets? How many of you go through the morning messages, whatever I mentioned it? So, the market is clearly in a phase wherein they are not able to move forward with all the global parameters are against, and even the domestic cues are not convincing. So, as I mentioned, we needed something strong, at least in the domestic front, for our markets to move forward. And if you look at the way the Nifty is falling, almost from 20,200 odd levels in the last 2, 3 days, it has been falling off the cliff. And if you look at it, the high which was made here on 15th September, high is somewhere around 20,270 odd levels. From there, it has been a non-stop rally, like a down spike, and almost headed towards the 17,900 and 19,780 odd levels now. And the immediate support. I use the daily, what to say, the moving averages like 20, 50, and the 200. Why I use this? Imagine someone playing for positional. They will normally be looking for the support levels here. Someone who would have taken an entry here, who would be punching in their orders with the large quantities, they will be the ones who will be giving a lot of support at these important moving averages. That's the reason we use these moving averages for the daily chart. And if you look at it, where exactly the support can be coming in today, 19,726, and that is where the 20-day moving average is there. So you might get one round of a minor support here and a major support. 20 DMA is similar to the WMA which we use. So you might get a minor support, and this 50-day moving average is my super trend. So you will get some of the strongest support here. And do you see this red line, dark one? This is the 200-day moving average. This usually is like in a VWAP. So you will get the much bigger support at the 200-day moving average. So looking at the current scenario, probably the Nifty might just go hit this level 19,768 to 728. It is hardly like in 30, 40 points. You might get to see that getting hit, at least testing it once, and then we might see a day like in playing out where they wanted to do it and how they wanted to do it. Similarly, Bank Nifty, both 20 and the 50-day moving average is converging together, and you're getting to see them around 45,082 to 84, another 60 odd, maybe around 75 odd points. It is easily possible on this as well. Okay, so this is like getting into crazy, and definitely like in the way the market has been falling, you might expect some big fall because look at this. Bank Nifty has fallen 0.7%, Nifty has fallen 0.78. It's been ruthless selling. And most importantly, yesterday ICICI Bank was not falling that much. It was giving little bit of a support. Today that guy is falling 2.5%. That means the banks have started to fall in rotation. That is not a good sign. And similarly for the Reliance, yesterday it was down and out. Now it's not the Reliance turn, it is the turn of TCS and the Infi. So what they are trying to do is they are not only making one index fall, they are making sure that every other index is all like an index heavyweights is also falling so that they will be able to drag this market lower and lower. The only surprising factor in this fall, the global markets are falling, everything is falling. What is happening with the VIX factor here? By this time, with the kind of fall which we have seen, it's very strange because I haven't seen anything like this. When this kind of a 400, 500 point fall happening, you will normally see the VIX is also spiking. But if you go and look at the data, this is the data which I wanted to show you. It's mostly of long unwinding, but little bit of short buildup is also happening. If it would have been only long unwinding, I can understand the VIX is not going to spike. But with the short buildup coming into the picture, still if it is not spiking, this is very unusual. This is very unusual, and we needed to understand why it is happening. Is it because of the expiry day play? And I don't know how, when do you guys have seen this kind of a data on expiry day? Close to 12 crore open interest on the call side, 5 crore on the put side. This is huge, massive. Okay, so it someone is creating 12 crore open interest on the strikes, and that too, the strikes, if you look at it, it is all concentrated. It's not as if like an it has been distributed across all the strikes. It is concentrated only to a few strikes here. Okay, so you don't have anything below that 90,600 mark, nothing much. 19,700 to 20,000, you have the maximum. Similarly, on the put side, you can clearly see 19,700 to 500, that is where the maximum is. So, call side, it's a big number which you are seeing it. This is pretty significant. Okay, so for an expiry day, this is significant. And in case if you are looking for a trend day on the Nifty is already giving you all the signs of it. What are the signs which you needed to see for a Nifty trend day? Yesterday we were discussing all those things, right? But what is that which is bothering me? Whether there is a fresh opportunity for me to enter based on the data, whatever that we have been seeing? No, not at all. Yes, these are the days wherein it is going to be very difficult for us to get a fresh entry. Why? You are non-stop getting to see the RSI trading well below the 20 mark, and now even at around 12.29. This is crazy. Okay, so this is almost literally crazy. So please be careful. And you can look at all the indicators are above. Parabolic SAR, WMA, Super Trend, the VWAP, all your indicators are above, clearly indicating it is a sell. And the most important one, 9:30, 9:30 to 40, you are getting to see the market falling with volume. And you also got the two candle theory perfectly after 10 o'clock. Now, the only opportunity is, in spite of the two candle theory, we will not be able to enter because all the indicators are good except the RSI factor. So in that scenario, I needed to wait for the RSI to recover, maybe around 25 to 30. Then I may look for an opportunity to short this market. Okay, so that is the only scenario which is playing out. Now, considering the market has been falling non-stop, please be very careful because someone who's looking for a support, this is the area which is going to be a near support. So what normally people tend to do is when it is coming near to the support territory, the buying will emerge. Imagine when I know this is the area wherein the 20-day moving average is there, I will now start to buy my positions. Sometimes it may not go exactly to that level. That's a reason we needed to be really careful. Play with RSI only when it is going above. And if you're playing for an intraday, make sure that these two levels are the ones wherein the resistance are there and then we take the positions there. And when it is crossing this particular level with volume, then please be careful. Shruti, just check your system on your end. Everything seems to be working here. Yes, every parameter in the book is getting fulfilled. What I don't want to see, when the bounce is happening, I don't want them to give me the volumes. When it is falling, it is fine. But when it is bouncing back, if it is happening with volume, then that means someone is also equally contributing to take this market higher. Okay, so that is something which we needed to be really careful about. And one more thing, almost how many points is now recovered? 19,750 odd levels to 780, 30, 40 points have been like in recovering. Please be very careful. Just give me a second. Checking one more thing. Okay. Okay, this market seems to be in a spot of a bother. Please be careful. Guys, the most important element is with the VIX is equally falling, please be careful for positional longs and other thing because this is not looking. By this time, the VIX should have at least crossed 12, 12.5 for 400, 500 point fall, which we have been seeing so far. If it is not happening, there is something strange which has been happening. This might be to just fool off some of the weekends and then get an exit and so on. Maybe some of the hands who are holding their position, they would have been completely chopped off. They would have been completely taken out, and then the market may do a reversal. It's all a simple moving average. We don't use exponential. I use only simple moving average, and that has given me the results. That's the reason I don't use any of them. So now, as per our thing, first and foremost, we will connect all the dots and then we will proceed forward. The Dow futures, what was the Dow doing last night? How many of you tracked the Dow last night? We had a Fed event. So after the Fed event, what has happened to the Dow? Anyone saw the Dow last night? This is your Dow chart. So if you look at the Dow, I'll just put it on 5 minute. It started well, went about 34,750 odd levels, and once the Fed started to speak, you can clearly see the market started to tank actually. The reason is the Fed was saying like we might be making one or two more hikes. And the most important thing is they see that there is no recession, but there are some data points which is pointing towards recession. So there are economists and investors who would have felt like Fed is not up to the mark in terms of handling the situation, and they would not have liked it. And the market started to tank almost 300, 400 points from the top. This is on the Dow last night. So what is currently Dow is doing? Almost 54 points down. And looking at the Asian markets, Hang Seng is down by more than 1.5%, 2%. Even if you look at the Nikkei market, it would have been like in tanking big time. I'll just show you that. So this is your Asian markets. European markets have not opened yet. Asian markets all are in deep red. Okay, so this is also giving you a clue that all is not well with Asia, and also we are looking to see whether India can do some kind of a recovery, which is also not on the radar. What is that also bothering? The crude, though it has been cooling off a bit from 95 odd levels to 92 odd levels now, the dollar index has been spiking from 104 yesterday, which we saw. Now it has gone above that 105 mark. So if you look at the dollar index chart, I'll just show you. From 90, it has again started to move towards that 105 mark. If it goes above that 110 and so, then it is going to be a real problem. This is your dollar index chart. On daily, we will see it. Almost the May, it has crossed the May highs and everything. And yes, during September, we saw that it was heading towards that 110, 112 odd mark. Now we are almost literally clearing all the pathway to head towards the territory. Whether it is going to be a double top or whether it is going to spike towards 120, 130, then we needed to see it. But as of now, this is not looking good for the emerging economies. If you are looking at emerging economies, those economies would be in trouble because they would not be getting the foreign funds as and when the dollar index keep high, like in going higher and higher. Why? Simple reason. If I'm going to be bringing my money to another country, I may not get a better return. I would get better return in my own country. So I will park my money in my country or developed economies. That's a reason the dollar index should not be strengthening. It should be weakening. Okay, so that's a reason people expect the dollar index to be trading around somewhere around 90 to 85 to 90 odd levels. Again, that is going to be putting pressure on your rupee as well. So rupee already it is crossing that 83 mark and staying well above that. If it is going to be the crude is moving higher, dollar index moving higher, you will see the rupee also heading towards 83.5, 84 odd levels. That's not going to be a good news. Automatically, you will see the bond yields going up. Once the bond yields going up, the RBI will not have any hesitation to hike the interest rates. Once the interest rates goes up, it will be negative for the banks and all the financial sector, and you will start to see these guys starting to underperform. Already you're starting to see them underperform. We might see some more performance of underperformance. It's not only about like an inflation being in control, it's about other parameters also. Okay, so Fed looks at all those elements and then they give us the guidance. But something which is very, very fishy, which is happening across the global markets, and probably you might experience some kind of a turbulence towards end of this year or early next year. And considering there is also election and other key elections in other countries as well, we might see some turbulence going to be happening across the borders as well. Okay. But today's strange phenomenon is the VIX. I'm really, really getting intrigued why this guy is just not going higher, instead going lower. This is one of those rare instances wherein you will get to see the VIX is not behaving the way it needed to behave. I don't know whether it is due to the expiry, they are just managing it, or it is all being done to show that this is how the VIX is going to be behaving. We needed to wait and watch. One more thing I'll show you, the EOD OA analyzer for the Nifty. If you see it, past 2 days it was long unwinding, but today it is a clear short buildup which has been happening. In spite of that, if I'm not getting to see the VIX moving higher, there is something very strange happening here. Okay, by end of the day, we'll get a clue. We'll see whether the VIX is going to spike in the second half based on some more short buildup coming into the system, or whether there is going to be a big recovery happening. That's a sign wherein we are going to be getting to see that. Guys, option IVs are not in sync with this. Option IVs are, yes, indirectly correlated with the VIX, but it is not directly. Option IVs and VIX are correlated. No. Okay, so the Nifty is making a bounce, heading towards the territory, and this is the area wherein I would be comfortable, right? So I just needed to get ready. So today we will try to trade on the Nifty. So I'm looking at 19,900. So the reason why I'm looking at 19,900, I'll show you that. So if you look at this data has been steadily falling in terms of the OI from 73 lakhs, almost come to 36. And this one almost to 2 crore from where it was 99 to 2 crore. It went to a high of 2.2, but it is at 2. Can you see what's happening now? The IVs are slowly but steadily, it is increasing. It should be a quick trade. We'll just see whether they're trailing on this one. After a long time, I'm trying this. Okay. I would have loved to see one more candle heading towards this territory and then getting a reversal. Anyway, let's see. The only problem with the Nifty, you may not be able to get the premium the way you capture with the Bank Nifty here. The index moves will be very slow. So it won't be like as if you're getting like an 5K over there, you should be happy with 2K here. So after this trade, we will again go back. We will revisit like and whatever the things which we have done yesterday, and then we will take it forward. So I'm just waiting for the next candle to see whether it is going to be a green or a red. Come on, where are you? Where is the candle? Okay, great. But it took a while, almost 10 seconds is gone and then the candle is getting formed. Nowadays, there is a weird thing which is happening. So what is the reason for me to take this trade? How many of you can answer this? Is it only because of the super trend rejection I'm taking it? So market has been falling from morning, but I'm not looking at this data. But what am I looking at? Even here, the market has started to fall. But in case if I wanted to follow the two candle theory, where exactly I would needed to follow after 9:45:10, right? So what has happened after 10 o'clock? The market is falling. We are getting two consecutive bars of more 125K. This is 136, this is 171, and third one is also 232. But unfortunately, I couldn't take a trade here. Why? Why I couldn't take a trade here? Because the RSI is already oversold. So once the RSI is oversold, we needed to wait for the market to do a recovery. Once the market is doing a recovery, you will be able to take once the RSI is above that 25 to 30 odd mark, and you can also look at to see it take a resistant trade. So if you look at it, all your indicators are above. In this scenario, only these three indicators have come here. So all these three indicators, is it really like in far off? Sorry, this PSR is really far off? No, it is close by. One more thing, the major indicators are all above. Okay, this is a weak indicator, correct? So your super trend is there. Once the two candle theory is formed, and if you're not able to take a trade here, I will look for a resistance trade, and that's exactly happening, right? So that is where we are trying to take this trade. I hope all of you are clear now. How many of you understood this trade logic? But unfortunately, what is happening? Is the market giving you the reward the way you wanted it? It is not moving it forward. So that's the reason, even though if it is a two candle theory, don't jump into the trade when you see the RSI is oversold. Instead, what I will do is I will wait for the bounce, get near to the resistance area. So in case if I'm entering into this trade here, Shiva, where will you going to be your stop loss? Do you see this void line? This void line is normally the stop loss. So this is like an AI generated signal. The signal is getting generated here, and it says, Shiva, like you can short this market at 19782 with a stop loss at 19819. So almost it is giving you like in a 60 or 70 points stop loss here based on whatever that thing which you should have tracked. I needed to respect it. But I also see the VWAP nearby. So what I normally do is I use the VWAP 5 or 10 points above that as my stop loss. Can you see the frustration happening in this one? The Nifty, many people ask me, Shiva, like, and why don't you trade in Nifty compared to the Bank Nifty? By this time, in Bank Nifty, you would have been able to capture 20, 30, or 40 points quickly and then move on to the next trade. Whereas in the Nifty, hardly capturing 4, 5 rupees, 173 to 175, it is giving you a struggle. It's not even moving a lot. It is just playing around in the territory, and you will just be like in getting frustrated sometimes. So we are placing our stall like in loss at 2250. Let's see how it is. And then I'm trailing it. So auto trailing, as and when it is keep moving, this will also keep moving. So this position got closed. That is the power of auto trailing in one click. You don't need to do anything. We will just set the target and then like and let the market do whatever the activity that needed to do. And then it might sometimes give you like in a large profit. Sometimes it's good. But someone who wanted to just get into the market, do a small trade and other things, it would have been done. That's it. Right? So now you would have understood the importance of taking a trade near to the resistance. Right? Okay. Okay. Now, to connect the dots, we have simplified the process for you. What is that? How many of you have got, all of you got the access to the OI Pulse now, right? If you have not, as I messaged you, just reach out to Raja. He will give you the access for the complimentary which we have provided. Now, in OI Pulse, just go to all menu Click on connecting dots. Do you see this? What is this connecting dots is all about? Whatever the things which I taught you yesterday, I have simplified and given you a simple tab here itself for you to track everything. For you to track everything. As of now, what is that data is suggesting me? Data is suggesting me extremely bearish. On what basis? It says in the last 1 hour the Dow has been falling. The VIX has also started to fall now. Let's see, go and see the VIX, how it has been falling or not. It says the VIX is starting to, maybe it might be starting to rise from the lower level. That's the reason it is saying, because it is 10:30 to 10:33, right? Only in the last few seconds. Okay, next, in terms of the volume, for hourly volume, it is not there. But if you look at the 3-minute volume, it has been giving you a clue. So if you look at the 10:3 to 10:9, this is where the volume picked up, right? Go and look at the chart for the Nifty. Can you see this? 10:3, 10:6, and 10:9. It is all meeting our parameters. So connecting dots is saying, Shiva, during this time, this volume is also meeting our parameters. Active strike IV is also telling me the clue. If it is green, that means it is bullish. If it is red, that means it is bearish. If it is blue, it is neutral. So in this particular time frame, you can clearly see it is bearish and then a bullish candle. Can you see the 10:12 to 10:15? It's a bullish candle. So what we have done here is we have given you a simple tab for you to identify on an hourly time frame based on all the connecting dots, whatever that we have done yesterday, whether it is bullish or bearish. This active strike IV and OI, it is based on the AI. So it is also going to give you the clue whether the OI interpretation is going to be bullish or bearish, whether it is trading in the negative category or positive. Super trend, RSI, the price, and then the daily trend. We are not including the PSR here, but that is like a minor indicator. But all the major indicators are added here for you to get a complete view based on the learning yesterday, whether it is going to be bullish or bearish. It's an easy one to track it, right? If the VIX is in green, what does that mean? If VIX is in green, that means it is bullish. VIX is bullish. That is the only strange phenomenon which is happening. VIX has to be like this. VIX has to spike. Okay. VIX, if it is spiking, if you see this, in the initial minutes it was spiking. It was in red here. Can you see this? After that, the VIX has been falling. That's the reason we are getting a green signal. Now, if you look at on a smaller time frame, what is the VIX doing now? Red. That means bearish. Why it is bearish? Then it means spiking. Can you see that? Is the VIX spiking here? And that is all we needed to. If it is a red bar here, it will be green. If it is a green bar, it will be red. Indirectly, it is giving you a denote. Shiva, if you are seeing everything in red, that means I am bearish. If you are seeing everything in green, that means I am bullish. Clear, guys? Now, I'll just show you the Bank Nifty for this particular date. What is that which we are seeing for 13th of September? How the Bank Nifty has played out. This is the day, you remember, yesterday I showed you on the chart, right? The whole day it was bullish and the trend and everything, we will be able to capture it here. Now, if you look at yesterday's data, the same Bank Nifty, how it is. Morning it was bullish. From there, it started to become extremely bearish. Towards a late end, there was a minor bit of a recovery and other thing, but it was not a major one. But overall texture during the market hours, 9:30 to 2:30, that's where like and we closely look at, right? It is all extremely bearish. So will it be helpful for all of you to connect the dots in a single place to know where exactly the market is doing, what exactly the market is doing? How many of you feel whatever the things which we have learned, what we have done is we have given you a simple tabular form here. You don't need it to look at anywhere. If you wanted to just look at all of them in one single arena, this particular page is all is good. Okay, so click on the connecting dots which is available, which will give you a clue what exactly the market is trying to do. Okay, Now we will go back here. Dow futures is in the negative. India VIX, now for some reason, the India VIX is starting to bounce. But what I wanted it to go above yesterday's high of 11.5 and then keep scaling higher and higher. Only then I can expect more fall on the Nifty today. Otherwise, we might see the Nifty getting into consolidation from here, and it might be a expiry day play, which will be starting to play out. Next, the OI spurts. You guys tell me or how you would read this OI spurts data now. Because today is a day wherein I'm going to be asking you questions and I wanted to see how we are going to be playing fair on that. So the market is trading somewhere around 90,750 odd levels on the Nifty. We will focus on Nifty today because since Nifty is an expiry, we will see how it plays out. 90,800 in the money, 400% jump, 40% jump in terms of the OI, and it is almost meeting our requirement. And you see all the deep in the money strikes, 19,900, 20,000, all, it is all having a short covering. How do we know that it is a short covering? OI is falling, price has moved more than 50 or 100%. Short covering here and long build up here in the OTM strikes. How the markets are looking like? Extremely bearish. If this is bearish, as a buyer, where exactly you will be in? As a buyer, I'll be in the PE side. As a seller, I should be in the CE side. In the selling, you can clearly see not only 19,900, 800, 750, all of them have fallen more than 80%. And look at the OI jump. 18,000%, 2,400%, 3,600%, 4,000%. It's all a huge fall which has been happening in terms of the price increase in the OI. So this is a massive confirmation that the writers are there on the call side, buyers are there on the put side. So as a buyer and seller, which side you needed to choose? The clue is entirely given to you here. All we needed to track now is whether there is a further increase which is happening or from here there is a drop happening. Now, the VIX has started to spike. Can you see this? The market is not doing anything, but VIX has started to spike. What does that mean? The market is not doing anything, but VIX is starting to spike from almost 10.9 to 11.10. That means someone is starting to add some short positions at these levels. So only when the shorts are coming into the system, you might see all this happening. Good. So slowly you guys are getting there. Perfect. The OI strikes on the futures. I'll just show you that. Do you see this? This is your Nifty chart. First, we'll see the futures. What is the futures data indicating to you? I'll remove this blue line. What is this futures chart is indicating to you? I'll just see. This is your future chart from yesterday. So if you look at the futures OI, the green line which you see is the OI. It was around 9.4. It came to 9.2. Now it is towards 9.7. Okay? And just you needed to correlate it with this. Market was falling. OI was falling on the futures. What is this? What category it is? Q1, Q2, Q3, Q4. Q4, long unwinding. Why it is long unwinding? Market is also falling. OI is also falling. That is called as long unwinding. Next, what is happening here? The market is again tanking. The OI is jumping. What category is this? Initially, people who were carrying the longs on the system, they all exited it. And after that, short started. Okay, these guys are going out. let me go and build my short position. Then they started to bring the market further lower. Now, market is in the sideways, the market is not going anywhere. The OI is also just getting stagnant. That means at this level, only buy and sell of existing position is happening. There is no fresh long buildup or short buildup is happening. Clear? This is how you needed to decode the OI data based on what you see. Okay, we have given a simple term here. What is active strike? Active strikes are the strikes which is getting traded very actively in the market today. So those are the strikes which will be identified by the AI and it will calculate based on that. I will explain it again. Based on the futures data, we needed to see where exactly the market is headed. Imagine today market is falling continuously, and if the OIs keep on going higher and higher, that means it is a short build-up quantity. But initially today, the market fell, the OI also fell. That means it is a long unwinding, followed by the long unwinding. Shorts felt, okay, these guys have taken the market lower and they are not ready to buy the market. Imagine there is no fresh buying happening. What the sellers will do? They will come and initiate some fresh short position. That's the reason. Again, the market was tracking. The OI is jumping. This is called a short build-up. Then now it is in a neutral phase. That means after a while, everybody is tired. They said we have done enough. Already we have taken the market down by 140 points today. We will take a breather. Why they needed to take a breather? Because whatever the options that they are doing and everything, if the options goes to zero in the morning, do you think they will be able to make money? No. They needed to keep the option prices at a particular level, keep on writing them. Keep on writing them when I say they needed to keep on adding more positions. Once they keep adding more position, that's when they will be able to make money. That's the reason they are going to be keeping it here. And then suddenly you will see a move either happening on the upside or on the downside. Why? In case if they have taken enough writing positions and then they wanted to make money on the upside now on the buying positions, they will do that by taking the market higher. Okay. Yesterday, one more thing which I was forgot to tell you. All this data, everything, whatever that we are looking at, we are looking only in the future chart, not in the spot chart. Okay. Futures is the traded instrument, not the spot. That's the reason we are looking all this data in the futures date. How will we strike the OI strike which we are talking about, right? For an entry, how are we going to be identifying a strike which is the one which is going to be the one which we will be taking a trade? That is something I will simply explain it to you. Now, just look at, first and foremost thing is you needed to look at where is spot is trading, where is future is trading. I'll just show you in the chart. This is your Nifty. This is your future chart. The price which you see is the spot here. This is your future price. Where exactly the future is trading? Nifty future is trading at 19,781. Nifty spot 19,754. Okay. So Nifty future is at 19,781. Nifty spot is at 19,754. Is it trading in a premium or a discount? First and foremost question to you all. If the future is trading above this price, it is called as premium. If the future is trading below this price, it is called as discount. It is trading above, then it is premium. So how much points premium is there? How much point premium? Around 27, 28, maybe? Yes. Okay, so 27 point premium, that is 19,781 minus 19,754, that is the premium which you will get it. Now, why the Nifty future is trading in a premium? The reason is the expiry is on 28th. We have 1, 2, 3, 4, 5 full trading days apart from today. We have 5 more trading days. Think that there is no holidays in between. There are 5 more holidays which are there, and the buyers who are buying the futures, they are saying, Shiva, then though the Nifty spot is trading at this particular price, okay, though the price is trading at this particular price, we are expecting the spot to come towards this level by end of the expiry, and I am ready to pay this premium, thinking that the market has a potential to move forward from here because it has already fallen 400 500 points, and I'm ready to buy this at a premium. Imagine if someone buying it at 19,781, do you think he is going to be only be happy with the like in a closure at the same level? No, he is expecting at least the market to head towards 19,850 or 900 odd levels. That's the reason he is giving the premium buy of 20 30 rupees. Because he feels the market has a potential, giving another 200 point move or 300 point move by end of the expiry, so that the spot, it can go to 20,000 and this one can go to 20,000, and I will be able to make some money. So what is the advantage here? Advantage is you're paying a premium thinking that you will be able to get it. But sometimes it may not happen. What if the market falls to 19,600? This has to settle at 19,600. Whatever the 27 rupee premium plus 100 and like in 150 odd rupees, you will lose everything. Okay, you will lose everything. Not every time that whatever that is trading in premium, you can expect the market to be bullish. And at the same time, even if it is going to be trading in a discount, there are possibilities you will see this as well. Okay, 19,700 is the spot at which it is trading, but the future is trading at 19,054, 754. This is called as discount. Why it is trading in a discount of 54? The reason is the market would have rallied a lot and it has a possibility to fall. Okay, the market would have rallied a lot. How do we know that it would have rallied a lot? If you go and look at the daily chart, you would see that. I don't know how many of you observed, when the market went to 20,200 odd levels, the Nifty was trading in the discount. How many of you noticed that? Did you guys notice that? So why it was trading at a discount here? It is trading at a discount because RSI has already gone above the overbought territory. Okay, so it is already trading near to that 77 mark on the daily RSI. That's the reason people felt it has a potential to fall. Okay, that's the reason at that level, you will not see people buying the futures. Instead, you will see the futures trading in a discount. Nobody will be keen to buy it at that level. Okay, so you guys needed to track all this. Whether the Nifty is trading in the futures or in the discount, all this should be looked at. Guys, in the index options, you will not be seeing the dividend impact. It will be only in the stocks you will see the dividend impact, not in the index. Okay, so in the index, it will be mostly because of overbought territory or oversold territory, or sometimes if imagine if the large stock is getting what to say, having a dividend impact, and if they are expecting 3-4% or 5% crash on that particular stock, and if that can happen impact the index, then there might be a possibility. Other than that, there is no dividend impact on the index size directly. Okay, so this is how the spot and the future needed to be looked at. And there are people who are getting confused with the premium which is there in the option prices to the discount. Now, I'll just explain you the option prices, premium and the discount concept here. Now, you guys are going to be telling me that as well. Today being the first day for the Bank Nifty expiry, for the next expiry, can you see this? The expiry is on 28th, and you can clearly see all of them are trading in the premium. But which side the premiums are higher? Call side compared to the put side. Call side premiums are 330, put side premiums are 290. For at the money, 41, 45, 100. Now, just look at this for the Nifty. Which side it is trading in a premium, which side it is trading in a discount. Call side, it is all trading in a discount. What is that which is trading in a discount call? I'll show you that. Just click on this LTP. Just look at this particular strike, 19,750 first. Okay, 19,750 first. What is the level at which, imagine if the market is getting closed today at this level, 19,756 is the level at which it is getting closed. What is the intrinsic value of 19,750? 755. What is the intrinsic value of 19,750? It is 5 rupees. Whereas it is trading at 18.25. That means 18.25 minus this 5, what is the premium? It is 13 rupees. That is what is shown as call premium. Clear now? How we identify the call premium, whether it is trading in a premium or in a discount? You needed to calculate the intrinsic value of a respective strike and then just subtract it by the amount at which it is getting traded. That's it. Now, look at this. Sorry. Look at 19,600. Okay? 19,755 minus 19,600. Something which should be trading at 155. Where exactly it is trading at? It is trading at 130. That means, imagine if the market is closing exactly at this level, end of the expiry, this particular strike will get an intrinsic value of 155. It is trading below the intrinsic value. That's the reason it is called as a discount. Are you able to understand this now? I've given you a simple, clear one. How it is a premium and a discount. All you needed to do is calculate it based on the intrinsic value. I will repeat it again. To know whether it is in a trading in a premium or a discount, just look at whichever strike which you are looking at. 19,750 call. Okay. It is trading at 18 rupees 85 paise. Just look at where 19,007, like in today for the expiry, where it will be closed. See, imagine if it is the same price. It is trading at 19,755 minus 19,750 because that is the strike which you have chosen, right? It should be getting closed at 5 rupees. Instead, it is trading at 18.8 minus 18.8 minus 5. That 13.8 is your premium. Don't worry about the decimals. Just like and look at the round figure. I'm just looking at the round figure. Can you see how I am calculating it? Now, this is trading in a premium or in a discount. That means it is trading in a premium because still it has some value that can be written off by the writers. Whereas, if you look at 19,600 call, 19,750, 19,755 minus 19,600, something which should be getting closed today for the expiry at 155, it is trading only at 130. That means it is having a discount of 25 rupees. Correct? Instead, like in trading at 165, 170, then that means it is premium, but it is trading well below the intrinsic value. If it is trading above the intrinsic value, it is premium. If it is trading below the intrinsic value, it is discount. Guys, I hope you guys have understood it. I can't explain much better than this now. Imagine if it is trading in a discount, is it beneficial for the buyers or sellers? When it is trading in a discount, it is advantage for the buyers. If it is trading in a premium, it is advantage for the sellers. Guys, if a particular product is getting sold less than the production cost, do you think the seller will be able to make money? No. Imagine if a seller is coming and creating a product here at 130 now, and if the product is going to be getting closed at 155, he will lose 25 rupees. Correct? Then will he sell this product? What is the fun for him to go and sell a product which is going to be getting closed at 155? Use that logic. Yesterday we used that logic and you saw how the Bank Nifty recovered and then the discount turned into the premium. Did you see that? That's the reason tracking the premiums and the discount is going to be very vital on the expiry day, because this can change the track completely. Guys, put yourself from a seller's shoe. Okay, to always, when you are trading in the market, you always, whether being a buyer or a seller, you should be thinking from a seller's perspective, because he is the one who's creating the position. Why would a seller go and create some fresh positions here? I wouldn't do that. If I'm a seller, I wouldn't do that. I know I'm going to be paying another 25 rupees back to these guys. Why would I do that? I wouldn't. Instead, what I will try to focus on this, where I see 25 rupee premium, 30 rupee premium, 40 rupee premium. What I will normally do, imagine the market has been continuously falling. I will look for a support area and then go and short the puts. Why? Because from here I am expecting the support to make the market move higher, right? As a seller, I will try to short it. And if I see some kind of a buying emerging at that level, then I will go buy deep in the money calls. I wouldn't buy OTM calls. I would buy deep in the money calls. Say, for example, something which is trading at 200 or 180 or 130, I would buy them. I wouldn't go and buy any OTM calls. Okay, because these are all already trading in a premium. Here, I have an advantage as a buyer. Here, I have a disadvantage. Similarly, as a seller, you have an advantage here? No, you have an advantage here. Where? This is like in any way, it's a OTM. But as a seller today, you have an advantage only on the put side at this current juncture. Yes, this is what you guys many a times get clueless, right? Why all of a sudden the market makes a sudden U-turn and other things? Have you ever wondered why the market makes a sudden U-turn on certain day? If you would have gone and observed the premiums on those days, you would have seen some of them would be trading in a discount and so on. That's the reason you will see all those moves happening, the random moves and everything. Okay. Now, guys, I've made it very, very simple. I don't think anybody would have given you this kind of a simple explanation in terms of the premiums and the discount. I don't think anybody would have covered this aspect at all. Okay, everybody would have given you technical nuances and other things. I don't think anybody would have given you a layman understanding of how this premium, whether it is in a premium or in a discount. Guys, what I want you to do is, again and again, I want you to watch this video once you guys go back, once you have the recording. Many a times, sometimes when you are watching all these sessions and other things, it will be very difficult to grasp it on the first time. Why? Because what I have learned over the past 15, 20 years, I would have been compressing everything and then sharing it with you, all of you, in a 5 or 6 hour session. There are people who have been telling me again and again, Shiva, I watched your videos at least 15 odd times. The last 3 days video, they watched 15 odd times. And every time they got some new insight, it seems. It's not only one. There are several people who have been looking at the recordings and then making a note of it. And telling you, there are minor things which I would have told you. Those are the things which will be very beneficial for you in the long run. It might be a small snippet, I'm telling you, but it may have a big impact in your trading life. Please make use of it. Watch these recordings again and again. Okay, watch these recordings and again. That's the reason we are giving you the document. We are giving you everything, whatever that is possible from my end. They're giving you the synopsis. Guys, I don't think nobody would have taken so much of efforts to prepare a synopsis and give it to you. We have done that. Recording, it is available. Pre-recording material we have given you. Please, 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 it's up to you. Okay, you guys have paid it, and I wanted to ensure that because I'm not sure whether how long I will be able to continue all these sessions. I thought I'll share my knowledge, whatever that I know. From there, it is up to you guys to take it forward. Sugas, we explained that 13th yesterday actually. So I don't know whether how many of you saw the 13th explanation. I told you the reasons as well. Why 13th was a perfect trending day, wherein it took the perfect support at the super trend couple of times and then market moved higher. Just watch the recording yesterday. We have explained that in yesterday's session regarding the 13th. So yes, guys, the only question mark is what is the challenge as a trader when it is trading in a premium or in a discount? I'll just show you that. If it is trading in a discount, okay, usually you will get to see this is like in a strange phenomenon with what you're witnessing. What I normally witnessed over the past, I'll just tell you that. If a particular side is trading in a discount, you will see the market is also trending on that side. This is like an uncommon phenomenon which we are seeing in the last 1 month or so. What is that? If the market is falling, the call side it is trading in a discount. If the market is going up, put side is trading in a discount. This is like in a strange phenomenon similar to the way the VIX is happening. I think everybody is getting clueless with the daily expiries that has been happening. The market is setting a new pattern, and I'm going to be observing it and then sharing with all of you. If you go and look back the history on expiry days, especially, you will see if the market is moving up, you will see the call side it is in a discount. If the market is moving down, you will see the put side is in the discount. But it is a strange now. Why it is an advantage if the market is moving up and the premiums are on like call side if it is in discount? As a buyer, I know the market is very strength and this prices can go and close at the intrinsic value. I'll be able to pocket this 20 rupees or 30 rupees or 40 rupees. But today, the market is against. Okay, the trend is against, and it will be very difficult for me to go and convince and buy a call today. Why? Because market is steadily falling. If you go and look at the trending OI data, it is telling me, Shiva, they have created 14 crore, whereas 8 crore here. That means sellers are creating more and more positions here. My worry is, what if the sellers are going to be taking the futures to match this price here? Why? Because they needed to win the money. How to win the money? They have to bring it down. That's the only way they will be able to make it, right? That's the only catch point today. That is the only catch point today. But similar to yesterday, we might see some kind of a moves like this. As it is heading higher, what are they seeing now? Can you see this? It's a move just to do that. The price at which? Can you see this? A quick move. I'm just going to be doing a quick scalp here. Is it moving with the volume above the VWAP? Why is it being done now? Why this move is happening? Understand the logic? To adjust the premiums on the put side, and at the same time they wanted to ensure that they eat the premiums which is there. So as a quick scalper, I needed to be really quick here. Sometimes it can go like in 10-20 rupees also against us. So I'm just looking for another reversal trade here. Till this time, I needed to wait out. So don't try to go all in here. Once it broke the super trend and other things, I would wait till the VWAP level. So VWAP is 19,795 to 8020. Another 20-30 rupees I needed to play for it. Now, if you go and look at the premium star, what was the premium sometime back? It was all 30-40 rupees, right? Now, 21 rupees. And the premiums are here. It is all coming down. Can you see it? This is how they adjusted. This is how they adjusted. Yes, this is a no trade zone, but I'm playing for like a resistance here, right? I'm just trying to buy here and then buy here. This is my first entry point. This is my second entry point. So 148, 149. Can it give another move towards this territory? Now, I'll just show you this as well. This is your option chart. All of them. It went to a 190. From there, it has been falling. What is happening here? What clue you're getting it here? The IV is falling. The green line which you see is the IV falling. The O is stagnant. That means someone who would have bought overnight or like in the morning, they're all booking their profits. Now, it's going towards the 140 mark. I'm just adding few more quantities here. So I'm going to be adding here. Till which level I'll be adding today? I'll be adding till the VWAP. This is the only possibility which I may be able to get it. This is the area wherein I wanted to go all in. Okay, so currently we have deployed around 4 to 5%. I wanted to go all in once it goes to this territory. But in the meantime, what is happening with the Dow now? So there are two things which is helping this market to go higher. One is the call side discount is making the markets to move higher. Next is the VIX. From morning, the VIX has been saying, Shiva, like, and we are not even spiking. We are going towards the day's low. But what is again a concern for me is that is a very strange market, right? What is that? The overall texture of the market is bearish. It has been non-stop falling from morning with the volumes. So I have to trust the process. When the market is falling with the volume, when it is heading towards the VWAP territory, I needed to wait and then take a trade here and then here. That's what I have been doing it. Most importantly, if you look at the trending OI data, it is almost 14 crore to 8 crore. So it is almost having a 5 crore difference, which is a massive one. That's the reason I'm just playing for that. And when you see that the average is coming down, and if you're getting like in a one move, try to reduce some quantity and then retain the remaining. These are all the trap moves. Someone who would have been buying the put without even looking at the data of the discount, they would have all been trapped. $90,600 from almost 30 rupees, it has come down to 20. Still the and it is in a discount. So are they going to be taking it further or are they going to be adjusting it here? We'll get to see. So which is the Nifty which is getting the move? HDFC Bank is getting into the green. This is the guy who is pushing it. If you look at it last 1 hour, this is the guy who has been moving the market 1% up. So they didn't go to that level. Instead, from here itself, they have been bouncing. I'll tell you the strikes as well, how we will be choosing the strike. So what is the criteria which I looked at to choose this strike? So if you look at it, just go to the option chain page. So we are looking at 19,000. 19,900. So it is in the money strike. And normally I look at 0.7 to 1 as an intrinsic, the delta for me to choose a strike. So in this one, this particular strike is having a 0.7 to zero point 0.8. This is perfectly fine. That means for every 1 rupee move, you will get 70 paise. If I choose 19,700, for every 1 rupee move, I'll get only 14 paise. Do you think that makes sense? No way. So I needed to choose a strike which will have a maximum benefit to the buyers. Always as a buyer, choose a strike on expiry day if a delta is around 0.7, 0.75 and 8, so that every 1 rupee move, you will get that. You will also lose a similar amount. But when you are choosing your OTM strike, you will lose the time value, and when it is recovering, you will not see the same kind of a recovery. That's a reason. Please avoid, as a buyer, don't choose anything which is there less than like a zero point 0.7 as a delta. At the same time, if you are a seller, we always needed to be keep looking at 0.5 and below delta for us to sell. Don't sell something which is there intrinsic value of 1, because if the market is going to be like a strongly bullish or strongly bearish, you will lose a lot of money. You will lose a lot of money. Okay, so always go with the delta of 0.5 and below. And as a buyer, we will look at 0.7 and above. Clear? So in Nifty, normally I will be looking at probably around 180 to 300 odd range, the strike prices which is trading at 180 to 300, and in the Bank Nifty, 250 to 500 odd range. Yes, this rule will change on other days, not on expiry days. Imagine if the beginning of the series, I would look at 0.5, 0.3 as well, 0.5 and 0.6 as well as a buying. So the most important element is, once you are getting into the almost something in green, try to square off some positions and run the remaining one. Don't try to close everything. Try to close some positions and then run the remaining ones. Looking at this, they have another round of an uptick. That's what I see. Let's see. So that we will have some funds to average our positions at a higher level. So if you are thinking about taking one lot trade, this is your entry area. The resistance will be our entry area, considering the market has fallen with the volumes, and any move towards this territory, we might see one round of a fall happening from here. In case, if it is breaking this level and then going up, normally they will try to do that. How will I be able to identify whether it is a fake move or a real move? If it is a real move, they needed to break the VWAP with a volume of 2 consecutive bars with volume here, and then I needed to square off all my positions which I am having it on the put side and then go on the call side. If not, they might just do one candle here above with one candle here not going higher, and you will see the market is just like in reversing from that particular level. That is a sign that it is a fake breakout. I'll also show you some examples how the fake breakouts will look like. They will just literally wanted to take some of the weekend stop losses. They will take it above the VWAP for some time, play near to this territory, and then pull it back again. But today's day is purely based on, I think they are playing for the this premium concepts. Yes, this has been interesting actually. Even after so many years, when I see something interesting, I always share it. That's what has been happening with the current batch actually. Because this has not occurred in the previous batches. We have done close to 10 odd sessions. In the 10 odd sessions, we never faced this kind of an discount where the trend is in the opposite side. Anyway, it is all interesting. Guys, it's not about we buying it at the P, like, and rather we could have bought a C. No. Unless and until they clear the VWAP, Cs are not going to be in favor. Okay, so these are all the moves. Imagine if I am a call seller, I would have already taken one of your kidney here. And then I will go up to this level, make sure that you all enter here for the call buy, and then I will take the second kidney out. Again, if I drag the market lower, you will lose it. That's what has happened with the Bank Nifty yesterday, right? That's the reason we needed to stay with the trend. Trend is your friend. As long as it is not breaking the VWAP, I'm fine. Guys, you have to have a strict, like in a, what to say, a rule where to buy a call, where to buy a put. If it is trading below the VWAP, I will consider the put. If it is trading above the VWAP, then I will consider the call, provided all the parameters are getting fulfilled. Now, all your parameters are below 1, 2, 3, which is your most important indicator on the chart, which is your VWAP, which is trading above. Then how will I be able to go and take a trade on the call side? Plus, the OI data is also suggesting, Shiva, they have been creating heavy positions on the call side compared to put side. If it is going to be same, if it is going to be similar data, almost 13 crore on call side, 13 crore on put side, that means it is neutral. But as of now, the data is suggesting, Shiva, there is a huge open interest on the call side compared to put side. Then in that scenario, I needed to go with these guys. Okay. So that's the reason I'm still playing for that. I'm just literally looking for this discounts to be coming into the premium category. Slowly but steadily, they are reducing the premiums here, but let's see how long it will take. 14 crore to 8 crore. What I would love to see now, this 14 getting increased to 15, 16 and 17, this 8 crore reducing to 7 crore, 6 crore and 5 crore. That means we will have a clear direction from here. So we have around 1,300 quantities now. Still, we are not out of the woods. That's the reason I'm reducing the quantity here. By this time, it should have been like an falling and then like an giving us a big move and so on, which has not been happening. This is a problem with the Nifty anyway. Nifty won't be like in case if it would have been Bank Nifty by this time, our 1% target could have been achieved based on the 20 lakhs, whatever that we have it in our account. Rather than using the entire fund, we would have used only 4 or 5%. Still, we would have been able to make it. But if it is a Nifty, it's a different ball game altogether. Okay, since we need to concentrate on the session, I'll try to close this position and then we'll move on. It's not heading anywhere. But guys, I hope, I don't think anybody would have been able to show you a live example how you needed to look at this premium versus a discount concept and how it can give you a sudden move. So all along I was telling you, right, you will see a sudden candle getting this, doing all these things. I think the market is literally giving you every day, Shiva, you're teaching this, let me show them how. Let me show them how. I don't think anybody would be able to get this much clearer than this in the live market. So why there was a sudden move? It is all to adjust the premiums, nothing else. Nothing else. This is how they do it. Gajendra, the only thing is, when you see a sudden big gap in the OI and then all of a sudden is reversing, it's a pure play. Large players, they would have bought certain things and then they would have returned also certain things. Once the writing is over, the smart money doesn't only do writing, they also do buying as well. So when the option premiums are cheaper, imagine on the call side the option prices were cheaper, right? So naturally they will go and buy them, and then they take the markets higher. That's what they do it. So we'll try to run it from 11.5. We have just put in an auto trailing. So automatically, whenever the price moves every 1 rupee, this will automatically move. So this is a good one, right? So you don't need to do anything. If the market suddenly moves, gives you like in a 20, 30K, it'll give you a 20, 30K move. That's it. The trade is getting close. No, this is not a golden crossover. What is a golden crossover? Both VWAP and your, the super trend and your WMA needed to pierce the VWAP. It is not there, right? And here it is not a golden crossover. So now, are you guys getting a clue where exactly we should be taking a trade after the two candle theory? The first trade near to the super trend, and if the super trend is getting broken, we will go all the way up to the VWAP. I'll be explaining you the two candle theory also as we go along. Don't worry. But so what are the options to choose the strike now? I'll ask you this. Futures, looking at this data, you know where exactly the market is headed now. Don't tell me you don't. So where exactly, do you see this? This is what I was telling you, the fake breakout. Imagine if the market is breaking and then going above the VWAP without any volume, though all your indicators are giving you a buy signal because it is trading above the VWAP, the WMA is here, your super trend is here, your parabolic SAR is here, everything is there. And it is RSI is also there. But what is not there for the Bank Nifty? What is not there for the Bank Nifty today? Volume. If the volume is not there, don't even bother to go and take a trade. Why? If you just go and look at the data here on the trending OI is still showing you bearishness, correct? It is still bearish, 120.89. And most importantly, on the chart, though they are going, they don't have the volume. So naturally, you can expect a fall. This is called as a fake breakout. What is this is called as? Fake breakout. I was just wanting to show an example. Market said don't go and search for it. I'll show you the live one. This is the fake breakout. I wanted to show that in Nifty, but Nifty hasn't happened. But in Bank Nifty, it has happened today. Guys, the only way to track all this is you have to keep shuffling the tabs, keep a track of everything, keep looking at the premiums, how the premiums are every now and then. I can proudly say we are the only ones who provide this options premium in a live market, not only here, even in the one-click platform. Okay, so if you go and look at the one-click platform, just click on this show option list. Okay, and here show premium. It will show you how much premium is there in each of the strike, what is the combined straddle premium, and you will be able to see the intrinsic value of that. Is it not a beauty for you? Someone who is going to be looking to buy or sell from here, you will be able to see how much is the premium, whether it is trading in a discount or in a premium. You can see here, the IV is here. How much is the intrinsic? Can you see this? All of this data is being provided. Is it not a beauty? So you don't need to look at anywhere. It's given, absolutely given here in the one click. Someone who is using to trade, you will be able to do that. So how to decide whether it is a fake and then how to exit the position? Guys, it's very clear, right? When it is moving higher without any volume, why would I exit the trade? I would wait, and then give a cushion to my stop loss, whatever that is possible. Imagine I cannot wait till as long as I'm losing 10-20%. I will take positions based on my stop loss risk appetite, and if my stop loss is somewhere around 1 to 2%, and if I wanted to hold till that level, I will hold it. Beyond that, if it is keep on moving, even with low volume, then I have no other choice other than to exit it. Yeah. Guys, if you are using MacBook, just check whether you have allowed everything, the settings. Otherwise, you have to remove the ad blocker and then you will be able to see it. So what purpose we use the intrinsic? Because we use the intrinsic to know at what level the strike can get traded and get closed today, right? Imagine if the market is at 19,771, 19,700 call should be trading at 71 rupees to close. Where is exactly it is trading at? It is trading at 55 rupees. Instead of 72 rupees, it is trading at 55. So naturally, I can expect another 15 to 20 rupee move on this one. So that's the reason we look at the intrinsic value to know where exactly by end of the expiry, this particular strike can get closed. Guys, intrinsic value plays a huge role on expiry dates. Okay, those who are unable to see this white line on OI pulse, just go into indicators, just add OSPL signal. Second one, OSPL signal, and you will be able to see that white line and everything. So white line is denoting it's a stop loss level. So Nifty is trying to take a support at the super trend, and it is just playing around in this territory, right? Super trend to VWAP, VWAP to super trend. Bank Nifty other hand, it went above that VWAP, came back, trading below that level. Now, I will also show you tomorrow or day after whenever I'm taking a trade. Tomorrow probably I'll show you that. How you needed to correspondingly look at index future chart and the option chart to place your stop loss. I will show you that also tomorrow. Okay, so that it will be easy for a newcomer or a newbie who's playing with one lot, how you needed to place a stop loss, because we are not looking at the option chart. We are only looking at the future chart to take a trade. So someone who's new, who wanted to look at the option chart also, I'll explain you tomorrow how we will be looking at. So now, this is a new day for Bank Nifty. Now you guys are going to answer me how you will choose a strike for Bank Nifty today. This is your Bank Nifty. Okay, today if you're buying a call or a put, which is the one which you will select now? This is a new day, not an expiry day. I'll ask you, if you are buying, which are the strikes you will be buying it and what will be the delta? I will choose anything above 45,400, which is somewhere around 0.57 to 0.60, right? I'll choose this. And also, this is trading at 400 odd rupees today. This is deep in the money. That is a very good one because this will have little bit of liquidity and other things. But what is the problem of choosing 45,000 today? You will only get 35 paise. Here at least you will get close to 60 paise. So it's almost double here. So that's the reason we always look at the strikes which is trading between 350 to 500 odd range on first day of the expiry in the Bank Nifty for 400, 500 and till up to this level. This is absolutely fine. But if you wanted more liquidity to be there, always choose a round strike. Round strike will get trade more compared to the other ones. Okay. So if you look at the volumes also, this one will have like an almost higher volume, 82.99. If you look at this, 26 lakhs, this one is close to 1 crore. It is almost similar there. So you can look at 409 or 471. If you're a seller, which is the one which you will choose? I will go for 0.4 today, not 0.5 also, 0.4, which is 45,400, which is trading at 222, or this, or this, or this. These are the strikes which I will choose. Why? If the Bank Nifty moves higher, you for every 1 rupee move, you will get only 0.27, 0.32, 0.37. So as a seller, you shouldn't be giving too much when the market moves against you. As a buyer, you needed to get the maximum when the market moves in your favor. That should be your logic when you are taking it. Okay, guys. On that note, we will take a break and then we will be back.
Recording stopped.